This is our Forex blog for August 15th, 2012. And like we do most days, we use our currency meter as part of our three-step easy Forex trading system to identify the strongest currencies to buy versus the weak and sell the weakest versus the strong. This is step one of our three-step Forex trading system. And this is our sortable build your own trend currency meter that allows you to set the weights in which of our different statistical tools you want to use. And then you can sort it by the quote sheet, and it will always show the strongest ones. I like to sort it based on the hourly trend. CAD, Australian, New Zealand, and pound are the strongest. Euro, Swiss, yen, and dollar are the weakest, at least on the hourly trend. So the real-time trend, which is made up of 5 of our different tools in this particular case, 3 of them measure the percentage of CAD pairs going up or down versus the bottom ones, and 2 of them measure the intensity. So just like in football, a 300-pound guy running 10 miles an hour at you is going to flatten you compared to some kid in junior high school weighing 140 pounds running 7 or 8 miles an hour. Force equals mass times velocity, and that's what our tools do. When the majority of currencies are going up, and you're going up with incredible intensity, guess what? They tend to continue. And that's the whole point of trading. You're not going to have 100% winning trades. Some days you might even be right 30 or 40% when the market's very choppy. But the point is, always have small losses, and on good days when the market's trends continue and go your way, you have much bigger wins than losses. So let's look at this CAD here. The real-time trend's up here at 640. The 15-minute trend's up. The hourly trend's up, and daily, weekly, monthly. Anytime all the time frame trends are up, that's a trend that's likely to continue. So most days you have the dollar or the yen as either strong or weak. I like to always have those on the top. I look at the dollar, I look at the yen, and trade those versus the bottom ones. You can see that it started out today, the dollar was quite strong. It got really weak here at 8:30. The 15-hourly trend was mostly up, and the daily and weekly trend was up. I don't personally care at all about the monthly trend, although I will use that to decide whether to trade super large lot sizes or my normal trade size. So that was strong earlier in the day. Let's find one that was weak earlier in the day. The Australian, the New Zealand was weak coming up to today. That could be another one that you'd be looking for to sell versus the strong dollar. So let's look at the Australian dollar. You're looking to sell that starting the day off. And this one, when you look at the currency and you see it's already down, it's come down, it's already near our lower containment band. It may not have that much more room to continue to the downside. So if you basically sell this here when it breaks down underneath those lows, you can see it only fell about 10 pips. See the weakness here? Comes back up, not that much strength. So that's a trend that you want to continue to trade on the downside. It never went above this high, never went back above yesterday's low. And on the way down the second time, guess what? There wasn't any more weakness. So the weakness in the Australian, unfortunately, didn't result in super big moves today. That's how you want to use our tools in real time. Last night you saw a lot of weakness. You continue to sell it, sell it, sell it. All the down waves have incredible weakness until here. So it really gave you a 3-hour head start for a possible reversal. Anytime the market keeps making lower lows, that's a trend that's going to continue. This is the first time it failed to make a lower low. Once it breaks above the high, especially the previous day's low, it's likely to retrace back up at least 38 to 50% of the down move. Here's the high, here's the low, and look where the market went, right almost to the pip, the 50% Fibonacci area, maybe a pip away from. And that's what typically happens. When trends, no longer have the momentum, they're very likely to reverse. And you can trade currencies in both directions. Just trade with the trend until it moves underneath our lower white 2.0 white band. Or in this case, when the weakness is no longer there, get out. This is a 4-hour Australian dollar chart using our volume profile and value areas. The value areas show you where 60% of the trading activity happened during any bar, and the middle area shows the most activity. So you can see from midnight to 4, 1.0474 was the area most traded. Typically underneath that the market goes down, and when it goes above it, everyone who's short is losing money, they tend to exit. The next 4-hour period right here, the price was very similar to that at 71. So from 71 to 74 for 8 hours, that's where most traders have their position. And you can see that's one of the reasons why When it went above that 74 area right here, really early into this new trend right here, went above 76, 77, it started this nice move up about 40 pips because the market wouldn't continue down, and most people had positions around 70, 74. And when it went above that, everyone who's short, obviously this is in a downtrend, a lot of people are expecting it to continue, and when it doesn't, they all have to bail, stops get hit, and it stops getting hit is kind of like fuel to a fire. If you have a fire and you pour gasoline on it, you have a lot more fire. Same thing happens when stops get hit. This is a tool that we plan to add to the software, so you can see whether it's be hourly or 4 hour or whatever time frame you want. You can see the point of control and the upper and lower value areas. And so if you think a market's going to reverse and it goes above the point of control of the previous period, or in this case the previous 2 periods, typically you get a big move. You can see the Swiss very weak. It's kind of pegged to the euro, so when they're weak, you can see they're pretty much identical. When the euro is strong, it was strong, and when the euro is weak, it's weak. It doesn't always have the same longer-term intensities that the euro does, but at real time it pretty much matches it identically. So that being the case, when you see the CAD being very strong later today, the dollar being weak, you can trade the CAD versus the dollar against the euro or against the Swiss. Let's look at selling the dollar CAD. Weak dollar, strong CAD. And one other tool that we've added recently that really helps in trading is the value areas of the previous day and the previous week. This one started off at midnight and it was above the upper value area of yesterday. This is where it spent the majority of its time, from the green to the red. The red here is last week's lower value area in dark red. And so when it breaks underneath that, it's very likely to trend to the downside. And also when it's underneath the point of control, it's very likely to trend to the downside. So you can see this just continued. This is not a currency I trade that much just because of its low volatility. It does not move that many pips per day, probably like 50 to 70. Compared to the euros, 100 to 120 is what it typically ranges from week to week. I mean, that's what the average is each week on a daily basis. Now, one of the things I'm also working on, I'm going to be releasing soon, is colored bars that pretty much tell you which direction to trade in. So you can see using the colored bars, this shows intensity. When it was above the value area at 15 right here, and the bars are green, you're looking to buy mostly. Once it breaks underneath 15 and you see mostly weakness, you're looking to sell. This is going to make it a lot easier to trade for currencies, especially the euro that most of us trade. This one started the day off underneath the point of control. It's not a coincidence that this is the average price that most traders yesterday had a position at. Underneath that, it's more likely to go down. You can see the lower value area of yesterday. This is where, when it breaks underneath this, it's very likely to break the previous day's low and to cause a big trend down. And the bars are very, very light shade of red. It's not that weak. When it's very dark red, it's extremely weak, intensity-wise. And if you get into a trade and the bars get darker red, you want to stick with it until they get lighter. Notice how it pretty much nailed the end of that trend. And so you see it pull back up to a resistance area like this. This is last week's average price. Above it, it's likely to act as support, but once it gets broken, it acts as resistance. There's selling here, so you have maybe a 10 or 15 pip move down here. Notice the bars up in this case are a little darker green, so it's a little bit less likely to come down. And when an area gets hit multiple times and the market can't get above it, guess what? It's very likely to break the lows, which it does here. So these are some of the things we're working on and planning on coming out. I'll showcase a few other charts with this. Here's the euro yen. Point of control, above that it typically goes up, especially above last week's and yesterday's value area high. When it fails to go above there, which it normally does, it usually does break out of there and shoots up 10 to 50 pips. When it doesn't, very likely to fall. And notice how the point of control acts as resistance. Last week's point of control, once it firmly gets broken, acts as resistance. And notice the low today. Last week's value area low. These are major areas of support resistance. And unlike pivots and other support resistance areas, even Fibonacci's, which I love and I swear they work if you use them properly, these are based on real activity levels where traders have most of their positions at. So that's why they're very effective.